Yes. Good afternoon. On behalf of Women and Young Member Excellence Committee of ICAI, it is my pleasure to welcome you all to Yashashwini and Ideal Series 87. Yashashwini and Ideal is a Wednesday series of program conducted by WYMAC for the Women CA and by the Women CAs. This series is an extension of Sky High Symposium, which concluded its 100 episodes. It is one of the committee initiative to not only disseminate information to women's members on technical updation and non-technical skill, but also to empower and inspire women members to come at forefront and realize their verbal skill at public forum. Now I introduce today's first speaker, CA Urvi Asar. CA Urvi ma'am is a seasonal content writer and editor with nearly 20 years of experience, specializing in direct tax, international tax and indirect tax across Indian and global jurisdiction. Operating independently, she supports clients in India and overseas with blogs, long form publications, LinkedIn personal branding, and editing of tax and business literature, with taxation as her core focus area. Without further delay, may I request CA Urvi ma'am to take us forward and begin today's online session.
Yeah. Uh, Good afternoon to all of you, and thank you, ICAI, WMAC, Preeti ma'am, and all the supporters who have organized this initiative. And Pooja, thank you for the wonderful introduction. Without much ado, I will just share my screen, and we can begin with the presentation right away. Uh, yeah. So the topic, my screen is visible to everybody, right? Okay. So I will begin with the presentation. So the topic for today is taxation of income from REITs and InvITs, and we are focusing on the tax implications for individual investors. So let's understand first what REITs and InvITs are. These many of these REITs and InvITs are listed instruments. If you go to the website and check, there would be you will find that these are listed, and people invest in them. So let's understand what they are. REITs are basically they are trust. They invest in real estate assets, which are basically properties which generate rental income, like malls, office spaces, etc. And InvITs, which are infrastructure investment trusts, they invest in infrastructure projects of the government and private entities like roads, highways, energy, and other infrastructure. Now, these entities are governed by dedicated SEBI regulations. There are separate regulations for REITs and separate for InvITs. And so these regulations govern where can they invest, how can they invest, etc., etc. So they invest typically through SPVs, and they may hold some direct assets too. They may be listed, publicly traded, some may be unlisted also, and they welcome investments from residents as well as non residents. So, having explained something about these things, okay, before we move into taxation, let me tell you that this purpose of this presentation is like twofold. Of course, we are discussing about the taxation aspects of these investment instruments, but maybe after this presentation, maybe many of us are not aware about these two entities as investment instruments. So this also opens an area for a potential investment instrument for retail investors. So maybe you would like to explore more after this presentation. So let's move on to the general principles of taxation. Now, there are alternate investment funds also. So many a times when you are filing returns of the clients, you will find that they have made investments in, you will get Form 64B, Form 64C, and so something will be investment fund, something will be business trust. So these are two different categories which you should know. So REITs and InvITs basically they are governed by dedicated SEBI regulations. Alternate investment funds are also governed by dedicated SEBI regulations. However, alternate investment funds are different from REITs and InvITs for various reasons. For tax purposes, let's recognize that alternate investment funds are considered as investment funds and the taxation is governed by 115 UB. Whereas for REITs and InvITs, they are considered as business trusts and their taxation is governed by 115 UA. And why this distinction is important? Because for reporting income in tax return and for reporting other details in the tax return, this distinction is important because the return demands this distinction, and that is why you should know this. Yeah. Coming on to so the basic framework of taxation, they are accorded the trust. The REIT or InvIT is formed as a trust and it is accorded a pass-through status. The government wants to encourage investments into REITs, which will build the country through real estate and infrastructure. So the government says that okay, whatever income is generated by the REIT, we will tax it in the hands of the investors or in the hands of the trust. It will be there will be only a single point of taxation, that is it will not be taxed twice, so it is accorded a pass through status. Now, I would say why it is a hybrid pass-through status, because it is not it is not that the entire income will be taxed only in the hands of investors. Certain income will be taxed in the hands of the trust also. So that is why a hybrid pass-through status. So the purpose of this entire framework of taxation is to eliminate double taxation. At the same time, it also wants to eliminate double non-taxation. So as we progress in the slide, I will explain what is double non-taxation. Yeah. So when the income is passed through, the nature of the income for the unit holder, it will be the same as in the hands of the trust. So if the trust gives income, receives income from SPV in the form of interest and that is distributed to the unit holder, it will be characterized as interest only. Uh, then the sections provide for different tax rates and the TDS rates for unit holders, which depends on the nature of the income distributed and the taxpayer's residential status. Now the graph below, this graph, it tells you, I have used different colors. Income also for the individual investors. Then there is a separate category of capital repayment. So all these five things have a different tax treatment, and you have to understand them differently. And finally, when the investor exits, that is, sells the units of the REIT or InvIT, then there is capital gains. So there are separate provisions for it. So you have to understand all these provisions differently. Yeah. And in this chart, this table, I have compared the provisions of section ITA 1961 and ITA 2025. So in ITA 2025, the scheme of taxation of business trust and the investors is not changed. That is what the government aims to do, and that is they are continuing with the same tax treatment, and the sections are listed here. So in future, whenever you want to refer, you can refer this slide. Now you can see I have just tabulated rent from SPV, specified sum, any other distribution, and finally sale of units of business trust. All this is taxable in the hands of the unit holder. Sale of shares of SPV, sale of shares held directly in any other income, it will be taxable in the hands of the trust. Okay, so let's move on. Uh, Before moving into the details of taxation, there is Form 64B forms a very crucial source of information for investors and for their advisors at the time of filing tax return. So they are mandatorily issued by the investment and REITs every year to the investors by 30th June. So if you do not receive your Form 64B, please call up your manager and ask for him. They will provide it instantaneously. But many a times it is not available at the time of filing the return. Your advisors tell you that please procure this. So ensure that it is available well in advance so that your returns are filed timely, because it has the entire information of what you need to put in your returns. So, moving on to the details, uh, let's understand the taxation of interest and dividend for residents and non-residents. Now, when the trust receives interest from its SPVs and it distributes the interest to the unit holders, that interest will be taxable for the unit holders as income from other sources. The TDS rate, the trust will deduct TDS on it for residents at 10% and for non-residents at 5%. Now, TDS, these different rates are provided in section 194 LBA, and this small section contains all the different rates of TDS applicable to a business trust. Okay, then moving on to dividend. Dividend again is taxable as income from other sources for both residents and non-residents, and the TDS rate for both of them remains 10%. So now, certain dividend is exempt. Which dividend? Where the SPV has not opted for the concessional tax regime under 115 BAA. So BAA talks about concessional tax at 22%. So if the SPV opts for this concessional rate, dividend will be taxable for the unit holders. If the SPV has not opted for the concessional tax rate, dividend will be exempt, and there will be no tax deducted on it. So unit holders will have to report this under exempt category in their income tax return. Right? Now, moving on to rental income. So, in case of REITs, the trust may derive rental income from SPVs or from the properties in which it has invested directly. So, this rental income it will be treated as income from house property for the unit holders. The unit holders will be entitled to deduction for interest on borrowed capital, 30% standard deduction, the normal way in which we compute income from house property. However, if the trusts that same income instead of distributing it as rent, the trust distributes it as dividend, that it will be taxable as dividend and not as rent. So that classification of income is very important. However, the unit holders need not worry, because that classification is done in form 64B, and they will just need to pick up the numbers from there for the purpose of the tax return. Here, for residents and non-residents, income categorization is the same. That is, it will be treated as income from house property only. The TDS rate differs. For residents, it is 10%, and for non-residents, it is the rates in force. So sometimes the tax incidence, TDS incidence is high for non-residents. So they need to check the possibility of procuring a lower deduction certificate well in advance, so that the TDS rate is applicable to them is reduced. So this is an extract of Form 64B, and it clause 7, if you see column 4, it will show how much interest is taxable, what amount is rent in column 5, what amount is dividend, which is in column 6, where the SPV has exercised the option of 115 BAA, and where the entity has not exercised, it is available in 7, and there will be no tax or TDS on column 7. So like, in this way, all amounts are available for you readily. You need to pick up these amounts, report correctly in your tax return and in schedule PTI. Now, there is certain uh, distribution called residual income or repayment of debt or repayment of capital. So earlier, what used to happen is that whatever this residual income used to be, that amount used to escape the tax net because there was no charging mechanism. However, the tax department realized that this is leading to double taxation. This distribution is not taxable in the hands of the business trust as well as the unit holders, and there is no provision to consider it as exempt. So, section 56 to 12, it was introduced somewhere in 23, and it provides for a calculation to ensure that the specified sum it is brought to tax in the hands of the unit holders. Of course, this specified sum is calculated in a manner so that which ensures that the sum which has not been taxed earlier or which is not exempt or which is taxed differently, that is excluded, and only the sum which appears nowhere has to be offered to tax as income from other sources. Now, the formula is provided in section 56 to 12. And if you see, it is the cumulative amount distributed over the years, which is not in the nature of interest, dividend, and rent, which is taxed differently, not chargeable in the hands of the trust under section 115 UA2. This is an typo over here, and it is reduced by the issue price of the unit and the amount taxed earlier as specified sum. So this is a complex formula, but the investors need not worry about it because this number is again calculated in form 64B, clause 8. I have shared the screenshot. If you see, this amount will be provided to you by the trust, and you just have to pick up that amount and place it in your tax return. Of course, make multiplied by the number of units which you hold, right? And this was about residual income. We discussed residual income. And finally, the last nature of income, when the units are ultimately sold by the uh, taxpayer, the tax rates are normally for listed units, we have 12.5% and 20%. And for unlisted units held for more than 24 months, it would be a flat 12.5% without indexation, STG, normal slab rate. So this sale of capital units is like sale of any other equity or mutual fund investments, right? And even units of business trust, if you see the scheme of the act, they are clubbed along with equity shares, units of mutual fund, or units of business trust in various sections of the act. Okay. Now, I have just tabulated a small example to discuss how residual income and capital gains will be taxed. So, let's say the issue price is 100. Let's say the fund has distributed in year 1 to 3, which the distributions are only in the nature of repayment of debt for the sake of simplicity. And finally, the unit holder shares the units in sells the unit in year 4. So let's see. In year one, this what happens is that 30 rupees is distributed as repayment of debt. What this 30 will not be taxable as specified sum, but it will go to reduce the cost of acquisition. Similarly, in year two, 40 is distributed, 70 becomes the cumulative distribution. And this 40 reduces your cost of acquisition. Finally, in year three, when 50 is distributed, the total distributions are 120. So 120 minus 100, 20 becomes taxable as specified sum in year three. So the government is saying, okay, I don't want to tax your cost of acquisition. I want to tax only what you receive extra, right? And finally, when in year 4, when there is uh, when you sell and you receive 150, then your cost of acquisition is completely adjusted, so that 150 becomes your capital gains. So in effect, what you're receiving uh, only that the incremental portion over and above the cost of acquisition is getting taxed, and not the entire, the cost of acquisition is not getting taxed. So this is how the scheme of taxation of residual income and capital gains is designed. Now coming to TDS. So the trust is required to deduct TDS on distributions which it makes to the unit holders. Unlike other sections, there is no minimum threshold. So even if the unit holder gets around 10,000, 20,000 annually, TDS will be deducted at the applicable tax rate. And there are separate rates for residents, non-residents for each income category. And of course, finally, TDS can be claimed as a credit at the time of filing your tax returns. So if you see dividend, when the SPV does not offer concessional tax regime, there will be no TDS. Rental income from REITs 10% and non-residents at slab rates. And when there is repayment of capital, there will be no TDS. So, moving on to reporting and compliance. Uh, Reporting and compliance requires meticulous details. Basically, the details are available with you, but you need to ensure that they match correctly. So, in the income tax computation, you will have to report separately for each REIT and InvIT, and interest, dividend, rent. If you see, the form has separate, the pass-through income must be reported separately. So you can, while reporting, you can just say IRB in bit read, and you can taxable interest under the respective section and put down the amount. Right. So this is how pass-through income needs to be reported separately, not clubbed with other interest or other dividend. Exempt dividend will go into exempt income schedule. Residual income will be reported as income from other sources, and capital gains on final exit, the way we normally report. Finally, schedule PTI. Again, PTI also has its own format. It requires details of the PAN of the trust as well as TDS. Uh, TDS identified for each income category. And all these details need to be provided meticulously. So if the unit holder has two or three REITs and InvITs, and it derives two or three different types of income for everything. The advisor needs to ensure that each item is reported separately. Otherwise, what happens is that there would be validation failures, defective notice, and it becomes difficult to upload the return. Finally, moving on to the key takeaways for the investors. Uh, so of course, as I said in the beginning, this is like, you as an investor, maybe you would like to explore more about this asset class, how you can invest, and high, of course it is high risk investment, but whether it is profitable or not, and how others are investing and making money out of it. So this is of course for each person to evaluate. uh, at the same time, investors need to keep, for tax purposes, they need to keep their residential status updated with the trust, because this ensures that TDS is correctly deducted in your tax return, and highly relevant for investors who are globally mobile. So maybe before first changing their residence, they will need to get in touch with their advisors to figure out when do they need to inform the trust. Then, of course, Form 64B is very important, and we have discussed its importance earlier. Non-residents are entitled to certain treaty benefits like they are entitled to any other income. So the general provisions, like they can apply for the lower deduction certificate, and they have to file Form 10F every year. Keep their TRC ready. This helps to ensure that uh, the rates, they are, especially in case of housing property, they can apply for the lower tax rates. And of course, one thing, TDS at 5% and 10% on interest and dividend, it is, these are one of the lower rates which the India is offering, and many treaties do not have such rates. So maybe these rates itself would be beneficial for the non-residents. So uh, I think I have completed my presentation earlier, and I would like to thank a special thanks to my cousin CA Juhi Kajaria, who has helped me a lot in this, and technology credits to Skywork AI, who helped me design this presentation. So I will stop sharing the slide, and since we have completed early, I yeah, since we have completed early, may I invite, participants can also share what maybe their questions. I can answer the questions. And if you all have any queries, or if you all have experienced any issues while reporting this income, maybe we would like to share on this platform.
Yeah. Very good afternoon, ma'am. Ma'am, I'm just like to take some questions.
Yeah.
Okay, so one question is asked by CA Dharavyas. Profit on
Mhm.
residual capital is taxed under the head of capital gain or other source?
No, it will be taxable as other sources, section 56 to 12.
Okay.
It is a new section which was introduced in 2023, and it provides for special provisions how income needs to be, residual income needs to be taxed there.
Okay. Ma'am, this question is like I want to ask, is there any recent amendment which the investor should be aware of as far as rates and invities is considered?
See, one particular thing which I have not covered here, which is relevant for business trust, is that so when SPVs, certain SPVs, they transfer their shares to the business trust and acquire units of the trust. That kind of transfer is exempt. That is something which was a long back. Another thing which is relevant for trust is that certain income, certain capital gains, they were not entitled to benefit of 112A. So that section is amended to ensure that they get the benefit of capital gains at a capital gains tax at a reduced rate. So that I think that is an anomaly which has been brought into the act. So which has been corrected.
Okay,
So
ma'am, one more question.
both these are related to the trusts, not to individual investors. So these are the latest amendments which I am aware of.
Okay, so one more question. From tax efficiency perspective, when does investing in REITs and InvITs make more sense as compared to the direct real estate investment?
Okay. So, see, the instruments, the way they are structured is that individual investors cannot invest in, say, Godrej. Government is coming up with a certain highway or certain rail project, but individual investors, how can they invest in that? Okay, so so this instrument offers them an opportunity to have fractional ownership in this particular infrastructure project. So any particular REIT or InvIT would be investing in multiple infrastructure or real estate projects. So investors can have fractional ownership to the extent of their risk capacity. Okay, now if your question was tax efficiency, this is not about tax efficiency. I mean, I'm sorry, I'm not understanding your question correctly.
Ma'am, the question is कि from tax efficiency perspective, when does investing in REIT and InvITs make more sense as compared to direct real estate investment?
No, I don't think tax efficiency will come here because both are different asset classes. Don't view them from the perspective of tax efficiency. You you view them from the perspective of an investment. What do you want in your investment portfolio? So
Hmm.
direct, if it is a direct equity, you will be having equity shares of one particular company or two three infrastructure companies, but this it is an asset class, it is a different asset class. So the question should be from investment perspective. The tax efficiency would not be the question here, relevant here.
Okay, ma'am. Well, I think these are the questions. So we'll ask the other participants if there are any. I don't think so. There are any more questions, ma'am.
Okay, would you like me to, since there is time, would you like me to elaborate on any particular slide?
Ma'am, and that is the point. Then I like to go for that TDS, the
TDS.
yeah, TDS application of TDS.
One second. Which one? This slide, TDS?
Yes, ma'am.
Okay. So, TDS is under the current act. TDS is governed by Section 194 LBA, and it says that it provides the different tax rates for residents and non-residents. It is a small section, but it has lots of complications. So. Basically, the trust must ensure that TDS is distributed as the right rate. The onus is definitely on the trust to distribute at the right rate, but the onus is also on the unit holders to keep their KYC updated and keep their residential status updated with the trust. Uh, right now the section does not provide any minimum threshold, unlike the other sections which say that if income exceeds a certain limit, if it is below a certain limit there will be no TDS, but in 194 LBA there is no such limit, and hence even TDS will be deducted even at a from rupee 1, right? And as we say, there are separate rates for residents and non-residents, separate rates for each income category. Now, interest, it is taxed for residents at 10%, and TDS for non-residents is at 5%. Dividend is the same, 10% or no TDS at all for exempt dividend. Rental income from REITs, residents 10% and non-residents will be at slab rates, that is 20%, 30%. And repayment of capital, there will be no TDS on that, right? So
Okay.
often, like while filing returns, what happens is that if you see the client has multiple investments, but at the same time, he also has investments in business trusts and business investment funds. So if you see the capital gains income from normal equity shares would be around say 10 lakhs, 20 lakhs, and because of this investments in business trust, they might be earning a big income of say 1 lakh, 2 lakh, a small amount as compared to the entire total income of the client. But the reporting of bifurcating each item, each tax rate, resident, non-resident, under business trust, it requires a great many details. So you may end up thinking that the time I have spent on reporting other income is much, whose quantum is more, it's much less than the time I spent on reporting income from the business trust. So, that kind of disproportionality will arise at the time of filing return. But it is necessary. It is, you cannot avoid it, and you must report the details accurately. So, this helps you if you have knowledge about these provisions. It helps you to finalize tax returns of HNIs and ultra HNIs, because at the time of investment they are not aware of all these tax implications, that reporting is requires so many details, but we know all these details, and when we know it upfront, we can whenever the season starts, we can always ask these details from them in advance rather than at the last moment. And while filing returns, please plan and build in some time that you will require time to match these details and fill them in the tax return correctly. So it involves sufficient time, and do plan for this time.
Okay. Ma'am, there is one more question by Medha Parthasarthi.
Yeah.
So, as an investor, 64B is most relevant?
Yeah, for business trust, 64B becomes relevant.
Okay.
And for
And
investment funds, it is Form 64C.
okay. So, one more question is, can you have this PPT?
Yeah, yeah, I will share with ICI. Why not? Definitely.
Okay. Ma'am, one more question I want to ask. Does reinvestment of distribution have any tax impact?
Reinvestment of distribution. Uh, Capital gains.
Yeah, capital
So
gain
when you
reinvestment.
receive
Either I'm
at the time of ultimate sale of the unit, so then
unit,
there are
yes.
normal capital gains provisions. So
Reinvestment also will have tax implication. After
reinvestment.
maturity, if I want to reinvest or something like that,
No, no, no.
after
There is no maturity. So there would
maturity,
be
okay, okay,
below.
okay.
No, one second. There would be when you invest in the fund would require you to hold it for 3 years, 5 years, as per the policy of the fund. Okay, you cannot sell it until that. That is commercials. But when you sell the unit, there will be capital gains. If it is long term, you can reinvest in 54EC, or you can reinvest in a new house. The normal 54F,
Okay.
54EC provisions will apply.
So I can take that exemption of capital gains from there.
Yes, yes, you can. So, capital gains are normal, what we understand. Whatever is in common knowledge will apply to business trust also. And if you see, like I said earlier, also, if you see the scheme of the Act, various definitions under the Act, under 111A, 112A, which define capital gains, they provide for equity shares, listed equity shares, units of an equity oriented mutual fund, and units of a business trust. So it is treated at par with other instruments. Okay, so it is being given the same tax treatment like the other instruments.
Okay, so as far as accounting treatment is considered in the financial statement, this will come under the investment head in balance sheet.
For investor, right?
Yeah, for investor.
Yeah. If you are a trader, it becomes a different ball game. But here we are talking of investors who are
But a
long
retail
term.
investor, it would be the part of the investment.
Balance sheet, balance sheet.
Okay, okay, ma'am. Let me check if there are any more questions. I don't see any questions right now. there are any questions. Okay, hello. Ma'am, am I audible? Urvi ma'am, hello. Ma'am, are you there?
Yeah, tell me.
Yeah. One more question is there.
Hmm.
Uh, how, okay, how dividend will be shown in balance sheet by Nikita Bansal?
Dividend from business trust.
Yeah.
Yeah, so it will be as other income, right, in your balance sheet. So if you are, it will be below, after gross profit. It depends on whether you are an investor or trader.
Hmm. Okay, so one more question is there. Can we obtain Form 64B from any other source if the rate is not responsive to request? Also, is there any penal provision on the rate in which for delayed non-provision of Form 64B?
I don't think that will arise because the REITs are required to submit this information even to the exchange and the CBDT. So the information is already collated. They have to just, bifurcate into PAN-wise 64B and share it with the investor. So over a period of time, so I have been filing returns of various clients, and of course there may be delay and sometimes they may not send. But if you call them up and say, they will always send. Ideally, it has to come into your mailbox by default. So
Okay,
I have not seen any case where the information is withheld by the REIT or it is not given on request.
completely fine.
So it is like your normal TDS certificate. You ought to receive it every year, the way it comes into your mailbox.
So, ma'am, these are the questions as of now.
Okay.
So, I would
I'm so
like to.
sorry I completed earlier, and
Oh,
but yeah, next time I'll put some more content.
thank you, ma'am. Thank you. So, on behalf of the organizer, I extend my sincere thanks to our esteemed speaker for the insightful session of taxation of income from REITs and InvITs. Your clear explanations and practical insights help simplify a complex subject and added a great value for all the participants. Thank you, ma'am, for sharing your expertise and time with us.
Thank you so much.
Thank you.
Thank you.
Thank you.
Swati ma'am, it's now your turn. Please go ahead, ma'am.
Good afternoon, all. I'm going to give brief profile of Shobna Rachlani, ma'am. Say Shobna Rachlani has over 5 years of corporate and academic experience and has mentored 500 plus students as an MBA professor. She will share the importance of digital presence and how professionals can begin their digital journey responsibly. Now I request C.A. Shobla Rachlani ma'am to take over the charge.
Am I audible?
Yes, ma'am.
Yes, ma'am.
All right. Let me share my PPT first. Let me know if it is visible.
Yes, ma'am.
Right. Is my PPT visible?
Yes.
All right. So first of all, thank you for this kind introduction, Swati ma'am. Thank you, Women and Young Member Excellence Committee, for giving me this opportunity. Even though this is not an interactive seminar, but let me just start with one question to reflect upon is Though many of us have excellent knowledge, years of experience, but don't you think very few people outside our immediate circle or in our surrounding know about it? If the answer is yes, if the answer is very few, please know that you are not alone. Earlier, reputation spread by word of mouth, but now it's spread by content and consistency. I know many of you might be agreeing on that. So I would like to share a recent news. Many of you might be aware of it. So today's session is not about becoming visible to the world. It's about becoming visible for the right reasons. So I want to begin today by sharing something very recent and very important for all of us as a chartered accountant. On 12th of December 2025, ICAI Council approved the amendments to Code of Ethics relating to advertising and website guidelines for CA firms, which will which will be effective from 1st April 2026. This itself tells us very clearly that conversation around professional visibility has officially changed. ICAI has recognized that in today's environment, ethical digital visibility is no longer optional. It's becoming integral part of profession. Under these revised norms, CA firm will have a greater flexibility is how they are present themselves digitally. All right. So, but it is equally important us to understand that change does not mean does not mean that aggressive advertising. It doesn't mean that exaggerated claims, promises, guaranteed results, nothing like that. So fundamental remain untouched. That is truthfulness, dignity of language, and professional restraint. And this is why today's session becomes especially relevant. I'll keep discussion to be very focused on just two things. First is why digital presence have now become a necessity for professionals. Why it is necessary for every professional to be visible even within the frameworks of ICAI ethics. And the second discussion would be we as a chartered accountants can start building digital presence responsibly and comfortably without crossing any solicitations. All right. Think this with a question quietly in your mind. There's a big confusion. People think that digital presence means publicity or self marketing. For professionals, especially chartered accountants, visibility is actually about credibility. When someone searches your name online, or you can say finds clear, he or she will find clear, consistent, professional content. It immediately builds a trust even before they meet you. Just think when you search for a doctor or a school, do you check Google or not? The same thing is for you with future employers, collaborators, and even students who are doing anything for you. All right. So professional visibility, I would again say it's not a solicitation. As per ICAI guidelines, solicitation is prohibited, but knowledge sharing, professional education, and leadership is permitted. As we all know, publicity seeks attention. Credibility earns trust, right? So professionals across the world are choosing visibility. You may be knowing lots of CAs are choosing social medias. And we, all chartered accountants, can do it ethically, responsibly, and confidently. It is not about letting our hard-earned knowledge remain invisible. That's all. So we can see it's about knowledge sharing, professional awareness, ethical digital presence. All right. So to today's clients, even if you say students, many MSMEs, businessmen, startups, even corporates, first search of online and then offline. If you are not visible digitally, it doesn't mean you are not good, but it means your work is invisible, invisible to next generation itself. Right? People Google for trust. Surveys show that professionals' online presence increase perceived credibility and even trust. For many, your first impression is not your visiting card, it's your LinkedIn profile, it's your website, your first page on Google results for you. So, professionals today, we can say, are going digital. Why they are going digital? Not just to chase work. Works find them because they are thinking it is visible. Let me be very clear here that ICAI ethics are not negotiable. But ICAI also allows education, thought and leadership. And that is exactly where digital presence fits in. Digital presence reveals who you actually are. As I said, digital presence reveal who you actually are. Ethical referencing, no handles, no links. You maybe have noticed CAs simplifying GST, income tax, MSME laws, faculty CAs building digital classrooms, women CAs building knowledge-led authorities. There are many CAs who are on social media transferring knowledge, many amendments, many updates. These professionals are not famous because they are on social media. They are trusted because they educate consistently. Yes, you may be approving on that. Women professionals have many opportunities on this. Ladies, your knowledge deserves a platform, not permission. I want to share something personal here. When I started, I had same doubt. Maybe you may be having, लोग क्या कहेंगे, मैं कैमरा में कंफर्टेबल नहीं हूँ, क्या मुझे बोलना चाहिए, being professional, whether it will be very much weird to speak something about this. Everyone knows, but once I started sharing that knowledge, I realized something beautiful. Digital presence doesn't change who you are, it reveals who you already are. Let me just repeat. I realized digital presence doesn't change who you are, but it reveals who you already are. All right. For women professionals, digital platforms are powerful. They're absolutely powerful. They offer flexibility. You can record, write, or go live according to your schedule. And responsibilities, of course. You can post, blog, videos, stand out to your own, and is judged by its value. It will be judged by its value, not how loudly you speak. Over time, it becomes a self-confidence builder. And what is that happened to me? In the women and young member context, this committee, think of digital as the own stage that you can control. Think of one topic in your practice where regularly you explain the same thing to your clients, your colleagues, maybe your friends, your followers. They can be, yeah, that can be in just your 60-second reel or video or LinkedIn post. Now, after the importance of social media, social presence for professionals, I'll start the second thing is how to start it responsibly and professionally. So first understand it's not about the content creation, just the content creation. It is professional documentation, not entertainment. Allow formats are educational videos, awareness post, law explanations, experience-based insights, academic discussions. Yeah. So discussions. So let me again repeat, the allowed formats are educational videos, awareness post, law explanations, experience-based insights, academic discussions. So here's a most important mindset shift. Do not think it as an content creation. That sounds like entertainment or marketing. Think as it is an professional documentation. You are simply documenting what questions do your clients frequently ask. What changes came in law the last week? What mistake should taxpayers avoid this season? What are the due dates? When you document your learning, your experiences, you automatically create a valuable content, even without being feeling artificial. Digital presence may not give instant results, but it gives a long-term relevance. Let me again repeat, digital presence may not give instant results. You cannot say if I post just 20-30 videos and I'll be very much relevant to all, but it gives long-term relevance. So choosing the right platform. Okay, so everyone knows there are well-proofed 4 platforms: Instagram, YouTube, LinkedIn, Facebook, which are very famous. Not every platform has the same role. So you do not need to be everywhere on day one itself. So on day one, no need to be present on every platform. For example, Instagram is excellent for awareness, wherein short reels, carousels, quick tips as in simple language are, many people post on it. And then YouTube helps you to build authority. People search topic on YouTube. Even I searched many things on YouTube. Longer videos and playlist on YouTube show depth and seriousness in your subject. So YouTube, what I said, Instagram is for awareness, wherein short reels, carousels, quick tips in simple language are done. YouTube again helps you to build authority. Longer videos, playlist that shows depth and seriousness of your subject. Again, the LinkedIn platform is where professional credibility lies. Your profile, your post, maybe your articles create a strong impression for your employers. Not even just for employers, for peers, for clients, right? So, and last is Facebook. Facebook is great for community, groups, people in local language, content and interactions with specific interest groups. So these 4 areas where you can start with content creation. And just giving more insights of what content goes with which platform. For Instagram, short form educational videos, reels, awareness or recall, easy entry on Instagram. Just have to prepare, make a profile account and then link with your Gmail, and you can start an Instagram channel. It has a fast feedback. Now if we say about YouTube, it has depth and authority, like we discussed. Long form explanations, long videos of how to register, how to how something works, food channel, how some dishes are prepared, how that GST return is filed by anyone, nil return can be filed ourselves. Evergreen content, strong trust building on YouTube can be there. And if we talk about LinkedIn, professional credibility, we have already spoken, peer recognition. And many times there is corporate and academic audiences we found in LinkedIn. These are found in LinkedIn. And for Facebook, there's a community based reach. Regional connect can be there on Facebook, and there is some mature audience on Facebook. So platform selection depends on your comfort, content type, what you are going to speak about, the time, and not at all on trend. Many talented women professionals step back, not because they have lack of knowledge, but because they lack visibility. Digital platform can give them voice. My new digital platform can give you a voice. So just putting you what exactly professional digital precautions should be there before putting content on social media. You can say it as digital KYC checklist. First, there should be a real name and designation. So as KYC is compulsory in finance, there is KYC of social media for CAs. Always use a real name and correct designation. I mean, no fake titles, no exaggeration. Add a simple disclaimer wherever needed. Views are personal for educational purposes only, not professional advice. Do not mention fees, any package, no, avoid posting client testimonials or any kind of comparative claims such as best, number one, top firm. And remember, no direct solicitation. No post, no, not to say direct message, DMs for cheapest audit or guaranteed refunds, etc. etc. Very, very important. Treat your social media profile like your visiting card plus reputation combined. Let me again repeat. Treat your social media profile like your visiting card plus reputation. All right. So let's talk with what basic requirements are needed when you are going to start on a social media. So a small a good camera smartphone, small fancy setup is needed. Natural light, maybe table lamp, simple tripod, quiet corner, clear voice. So good news is you do not need the fancy studio to start. Your smartphone is enough, or you can sit facing your window for natural light. This automatically improves your video quality. A basic tripod, switch off fans close to the mic, keep doors closed. Audio clarity matters more than fancy background. You don't need perfection. You need clarity and consistency. Remember, you are not, don't think you're creating reels. You are documenting your expertise. You're documenting whatever expertise you have. So what content framework for CAs is ethical? Four pillars of content we can talk about. Here, the safe framework you can follow is awareness, education, and response and experience, responsibility, like what is myth versus what are facts. What awareness includes is you can say updating about due dates, compliances, reminders, new notifications, etc. This all comes under awareness. Educational videos, concept explanation means explaining these concepts in simple terms like TDS, TCS, or basics of personal finance. Experience is what you learn from real life cases. Okay, so you can even display the what problems you face in professional real life without revealing client identity, such as three mistake we often for example, we can say three mistake we often see in GST returns. So responsibility means always highlighting limitations, disclaimers, or urging viewers to consult qualified professionals for specific advice. So as we saw, these four areas can be safe framework, ethical framework for CAs to start with: awareness, education, expertise, experience, and responsibility. Choose these platform that matches your comfort, your trend. Your profile is your digital visiting card, as we already discussed. And one thing can help you with this is AI. So use of AI as an assistant and not the replacement. So you can use artificial intelligence as your assistant. Tools like AI chatbots can help you brainstorming ideas, summarize long circulars, or structure a video script into a bullet points, which will be very useful, very easy for your videos. They can also help draft outlines in simple language, which then can even refine with your professional judgment. The key is AI does the heavy lifting, but final responsibility and accuracy remains with us. Never blindly copy. Always verify any technical point which with ICAI material, Bear Act, or official notification. Perfection is biggest enemy of progress. Your first reel in social media on social media will not be perfect. Your first YouTube video may not have an average lightning. That is okay. That is absolutely fine. What matters is consistency. Posting once a week or twice a month with a clear schedule. So over time, your quality improves, your comfort zone increases, and the audience start trusting your reliability more than your editing skills. Your thinking, your ethics, you can say your judgment cannot be automated, even with AI. So you can use AI chatbots for script drafting, topic research, caption structuring, PPT outlines. But it never blindly copy everything what is given in AI. Now again comes quality versus consistency. Simple, very simple. Improve gradually, stay consistent. One honest video is better than 100 perfect draft sitting unpublished. Don't wait for perfection. Start with what you have. Digital platform always reward sincerity, not delay. So remember that starting now is the time. So as I said, the first time to start was 3 years ago. The second best time is today. The best time to build your digital presence was few years ago. The second best time is today. Social media algorithm now even favors educational content, short and informative videos, and also regional language post. If you start today itself, you are still early among professionals. You are still early in that professional niche area, especially if you communicate in your local language like Marathi, Hindi, Sindhi. Decide that after decide even after this session, you will at least start up you will at least set up and update up one platform, maybe on LinkedIn, maybe on YouTube, within just next 48 hours, right? In reality, many successful YouTube educators started with very basic webcams and simple backgrounds, but grew because they showed up consistently, they showed up regularly. Remind you, my friends, digital platforms reward early sincerity, not late perfection. I personally use digital platforms for financial awareness and MSME education. That's the power of ethical visibility. No services, no solicitation, only simple knowledge. So, ethical use of digital platforms can be summed up in 3 words. We can say serve, educate, empower. Serve by sharing timely, serve by sharing accurate information that helps people show complaint, and financial awareness. Educate by simplifying complex provisions without fear or even without judgmental. Empower by encouraging your audiences. Uh, Empower by encouraging audiences to ask questions, learn from basic, and take responsible decisions, while making it clear that you are not canvassing any work. So you can just take a moment and reflect, what is really stopping you from building a digital presence? Is that fear of judgment? I can totally relate with it, because when I was starting a channel, I was always having question, ये सब बहुत झंझट का काम है. What will others say? Is that professionalism? Once I buy a better camera, then I will start. Or is it a time or confidence? Once you name your barrier in your mind, it becomes easier to address it. For example, if time is the issue, you can batch record 4 short videos in 1 month, and that is the beauty of digital presence. So in today's today's key takeaways you can start is, one, visibility builds trust in today's digital first world. So if people cannot find you, they may assume you are not active and updated. Again, the second key takeaway is, ethics are not negotiable. The ICAI Code of Ethics allows digital visibility by which also expects dignity, which expects no solicitation, right? So very, very important third key takeaway is, your knowledge deserves a voice. If you stay silent, silent online, someone else less qualified but more visible may influence the public conversation, right? Even you are more qualified, you knowledge deserves your voice. You have better knowledge, but someone else less qualified but it is more visible may influence the public conversations on the same topic which you are expertise in. So start today. So I would also like to add that ethical use of digital platform can be summed up in 3 words: serve, educate, and empower. So today's session in digital age, silence is also considered as a statement. If qualified ethical professionals do not speak online, that space get filled with maybe half knowledge and misinformation. Start small, start ethical, and let your digital presence reflect your professionals. What you actually are. Let that digital presence reflect that. So I would also like to discuss about few CAs who have already started their social presence and are very famous. Many of you may be knowing this CA Rachna Ranade ma'am, Pune-based CA, educator who builds a large following on YouTube and Instagram by teaching stock market and basics of finance and simple language. She just started with the classroom lectures. You can check her old videos wherein she has just started with basic teaching to students, and now she has millions of followers. She earns tremendous from social media. Again, CA Neeraj Arora sir runs a popular YouTube channel focused on only CA exams, CA conceptual clarity for students, proving that CA Neeraj Arora sir proves that niche educational content. He has selected only one area wherein he just talks about it, can create strong authority. So it's not that you need to speak up on all the areas which our profession has. You can just select one area and start putting the videos and content on that. Again, we can say about Tax Guruji. Tax Guruji, many of us follow CA Gaurav Jashnani, right? Shares details, GST and income tax explanations. He's also on YouTube. He's clearly an educational content for taxpayers and professionals. He's very famous. Again, CA Pooja Gupta, named as CA Guruji channel. She uses YouTube for GST, income tax, stock market, explainers targets at small businesses and retail investors. Again, we can have many of you maybe knowing many others which I am not aware. CA Dilip Badlani, he posts regular updates on walkthroughs on GST, digital tax provisions for practitioners and learners. Again, Sarthik Ahuja, very famous. And also the Rachna ma'am, CA Rachna ma'am, both are widely followed on Instagram. Creators sharing, these both creators sharing finance, they share about business, they share about investment content in an accessible style. Even a fifth standard student can understand very simply. They explain it. Now comes with CA Twinkle Jan. She's also content creator simplifying investment. Then again, taxes. She simplifies money management for Gen Z audiences. She's also on LinkedIn and social media. So any platform you can select, any platform. Again, giving the last example of CA Umesh Sharma sir. He's a central council member. CA Arpit Kabra sir, again a council member. These people are all in the social media presence. So they share GST, tax knowledge, AI knowledge through their articles, books, lectures in very simple language. And how can we forget that ICAI itself runs ICAI CA Cube on YouTube. So the channel for ICAI is ICAI CA Cube as a knowledge repository. That channel shows as a live example that even the institute using digital presence for learning and outreach. Don't you think so? So I think we are even stopping early. Let me just say lastly that let your knowledge speak. Let your knowledge speak responsibly, ethically, and confidentially. Let your knowledge speak not to sell, but to serve, educate, and inspire. Do message me with your social media accounts, account names, and I will surely subscribe and follow. Thank you for today's session, and any questions are welcomed.
Thank you, Shobna Roshani ma'am. It was very insightful, and I'm sure a lot of our colleagues and NCA fraternity members will have a lot of takeaways from your very interactive session. Let me take the questions. I'm just waiting for some of them. If already people have submitted, just to low. Meanwhile, people put in their questions. I have one question that when we know that there are a lot of chartered accountants already on the social media, right? So what is a key intake, or what is a key point that one should keep in mind to have an improvement in their content, or how do they stand out?
Okay. So it's a very interesting question. So ma'am, I would just say first start as in whatever knowledge you have. Gradually, when we are starting, we get to know what our audiences love. Like they comment us, they share the video, and then we recognize that this content is very much liked. This content is what I can deliver it very correctly. So we understand our niche area. Or the other way we can see is selecting just one area. For example, if we are selecting as an investment tips, so just giving investment tips, that one area will be there wherein we are putting on videos, and we can understand if people are commenting, they are liking, and they are sharing, they are downloading it. We understand with that all insights we have on YouTube, and even all other social medias. And that's why we can decide this content can be put in and this content can be again repetitively used. I hope I gave your answer.
Yeah. I mean, I understood a bit that, somebody who just wants to be there, or it's already there on the social media, just make sure that, rather than going wide on the topics, maybe the topics can be, just chosen one or two, but then stick to it, and
Yes.
make sure that the contents for those one or two topics are really hardcore, that people are bound to be there following you, and get behind you for more content.
Absolutely.
Yeah, and I really liked one point that you mentioned, in the beginning of your a session, that a social media visibility or a social media presence for us as chartered accountants is really not just to be there. It's really credibility, and that was a very fantastic point. And on a personal note, actually, it gave me also a push, that it's good to be on social media,
Absolutely, ma'am.
only if you have the right intention to be there. Because people make it so public that they just make their life open, to the rest of the world. But if your intention and the content that you want to put across to the world, if it's really good, helpful for others, then it's not a publicity of self, but it's really uh, you know uh, it's making your worth felt in a very good way.
Absolutely, ma'am. Absolutely agreed.
Yeah.
Just say you start from today itself. No fancy setup needed. Just start putting your content, and you will gradually learn what needs to be updated, what needs to be changed.
Urvi ma'am has a question she wants to ask, I think. Urvi ma'am, please go ahead.
Yeah. Um, yeah. Shobna, thank you so much for the wonderful presentation. I'd like to share my experience, but before that, I'll ask a question to you. So I see, when I see content of various CL firms or maybe individual authors or anybody, sometimes they have written at the bottom that we at ABC Co can provide these services, or how we at ABC Co can help you. So I wanted to know if that is permitted by ICI, or ICI doesn't allow that.
So to be very frank, this comes under soliciting. So
Okay.
that is actually not permitted, but with some terms and conditions, it is allowed. So maybe they following. I'm not sure what exactly you are with whom you are referring. So many CAs actually give that, but then they may be following, or maybe crossing the limits, but that is not allowed. It is considered as soliciting in code of ethics.
Yeah. So, according to me, if your content is good enough, you don't even have to mention that, because it is itself, it
Visiting.
draws people. So that is a subtle kind of, pull, right?
Absolutely.
Yeah. So, sharing my experience, like, earlier after my sabbatical, even I was not active on the professional forums. Later, I became active, and active in the sense, not very active in posting content, but active on what is happening. So, basically, these platforms tell you a lot about what all is happening around. For example, what WMEC or ICI is organizing. Then there are other organizations who have different initiatives for women CAs like BCS or CTC. So, CAs can they actually come to know what is happening around it. And they can follow people and follow these groups. That is one. Then another thing where these platforms help is connecting with people. It is very easy to connecting. Like I can today, I heard you, I didn't know you earlier. I can connect with you, and maybe we can take this call further. So it is very good in connecting with people, and you can even connect with seniors. You just send them a message, and people are very willing to help you. And I have received help from many such people. That is one thing. And another thing is that it would be an exaggeration to say that most of my clients, I have been able to touch base with them only through LinkedIn. So I'm not active on other platforms, but the LinkedIn platform has helped me to connect with my clients, pitch with them, and get good assignments and good roles. So that can also be very helpful. These platforms are very helpful, and it is not at all aggressive marketing. Like we get into the field and everything. It is just simple and I think you do, as you rightly said, that you don't have to do anything to be good. You just have to be genuine. That is enough.
Yes,
That
absolutely.
is enough. Seriously, that is enough. You just be true. Whatever you are posting has to be, if you are posting about taxation, it has to be accurate. It has to be correct. And that is why that is enough.
Right.
So
Yes.
that's what I would like to share.
Thank you, ma'am.
Thank you so much, Shobha.
Thank you, ma'am. Thank you, Shobna ma'am. I think we don't have any more questions. So thank you, Shobna Roshlani ma'am, for a very insightful session and this knowledge. And thank you for inspiring us. Also, my heartfelt gratitude to everyone for taking time to join the session and making it successful. Thank you very much.
Thank you.
Yes, sir. Sure. Thank you.